Welcome back to Doc Tickers. Today, we're going deep on BJ's Restaurant's latest earnings call for Q4 2024.
It's a pretty fascinating case study, really is, especially given where the economy's at. Seems like they're kind of defying the odds, right? Hitting record sales, strong profitability.
So, big picture, did BJ's crush it or did they crumble?
I'd say they're cooking up something special for sure. Okay, they did report a net loss this quarter, but that was mostly because of, some one-time charges they had. What really pops out is their adjusted earnings per share, which actually grew like over 5% compared to last year.
Okay, so making money, always good. But what about those record sales everyone's talking about? Where's that growth coming from?
Well, their comparable restaurant sales jumped up 5.5%. And it's not just like people spending more per visit. They're actually getting more customers through the door. Traffic growth is way ahead of the industry average.
That's impressive. But, growing sales doesn't always mean the bottom line is healthy. What about their margins?
This is where it gets interesting, right? BJ's managed to boost their restaurant level cash flow margin to 15.4%. That's a whole percentage point higher than last year. And they did this while still investing in, things like making sure the food quality is good and marketing.
Okay, so they're not just slashing costs to look good, finding ways to be more efficient. Got it. But what does that actually look like? Like, how are they pulling this off?
They're really focused on, operational improvements. One thing they did was they simplified how they do margarita orders.
Margaritas, okay.
Yeah. Sounds small, but it led to a 20% drop in comp drinks. Less waste, happier customers.
I love that. Little details, big impact, shows we're paying attention,
Yes.
right? But zoom out a bit. Big picture, how are they going to keep growing in 2025? What's the strategy?
Well, they're projecting comparable sales to climb another 2-3%. So they're not expecting things to slow down. Plus, they're opening a new spot in Arizona and remodeling like 30 existing restaurants. They're in expansion mode.
That's bold in this economy.
Sure.
What makes them so sure it'll work out?
They've put a lot of effort into figuring out what their brand is all about, what customers really value. And it turns out people love their pizza, of course, the Pizookie dessert.
Classic.
Yeah, and their craft drinks are a big draw. So they're leaning into that, what makes them unique, but they're also looking at how to make their pizza even better, give it that wow factor.
So sticking with what works, but still innovating. Smart. But, with all this talk about efficiency, operations, are they forgetting about the people? What about their employees?
Great point. Seems like they're very aware of, how important their team is. They've been working on simplifying tasks, giving better training, creating a more supportive work environment. They see their employees as key to their success, and they're investing in them.
That's good to hear. It's like a holistic approach, right? Customers, brand, their people. Okay, before we go full-on number crunching, let's have a little fun. Time for This Is Not Financial Advice.
All right, let's get wild. What's your outrageous but maybe plausible trade idea for today?
Okay, so hear me out. What if you bought BJ's stock and also invested in a company making like AI-powered pizza robots?
Whoa, okay. Spicy combo. You're betting on BJ's doing well, A&D on like the whole future of automation in restaurants?
Exactly. Riding the wave of their efficiency, plus that cutting-edge food tech. High risk, high reward.
Absolutely. But remember, folks, this is all hypothetical. Don't blame us if your robot chef goes rogue.
Just some food for thought. Back to the numbers in a bit.
Okay, so let's dig into some of the specifics, the stuff that really jumped out from this earnings call.
You got it. Break it down for me.
Well, we talked about that comparable restaurant sales growth, right? But let's unpack that a bit more. What's really driving it?
You mentioned more customer traffic, right? So what else is going on to get that 5.5% jump?
Their marketing seems to be working really well. They specifically said that Pizookie meal deal was a huge GE hit.
Yeah, the Pizookie. Can't go wrong with that.
It's definitely a winner. But here's the thing. Their sales were strong, like across the board. All day parts, all ordering channels, not just when that Pizookie deal was running.
So it's not just a one-trick pony. Their whole menu's doing well.
Exactly. It looks like they've got that balance right. Some tempting promos, but a solid core menu that keeps people coming back for more.
And their marketing's building the whole brand, not just pushing one specific thing.
Right. They even had strong sales on weekends, and the Pizookie deal wasn't even running then. So it's like their marketing is creating this buzz that lasts. It brings people in even beyond that specific promotion.
Okay, that's smart. Got to create that excitement that keeps going.
Now, remember, they're also expanding beyond their like usual California spots. They actually saw even stronger sales growth in those media markets outside of California.
Interesting. So more room to grow as they enter those new areas.
Exactly. It seems like there's a lot of potential in those markets where people might not know BJ's as well yet.
Okay, let's shift gears a little. Let's talk about how they're being so efficient. You mentioned the margarita thing earlier. Any other cool stuff they're doing?
Oh, yeah, tons. They're really committed to streamlining things, not just drinks. They've got some innovative solutions all over the place.
Tell me more. Love those clever ideas.
Well, one that stood out to me, they're using, get this, QR codes to track their equipment.
QR codes.
Yeah.
For like the ovens and stuff?
Yeah. So they've put a QR code on every piece of, important equipment in their restaurants.
Okay, I think I see where you're going with this.
So by scanning the code, they can see like the whole repair history for that thing, manage warranties, and even use, like predictive analytics to figure out the best time to replace it.
So it's like each piece of equipment has its own digital record. No more guessing about maintenance.
Right. Helps them avoid those expensive breakdowns by, fixing stuff before it becomes a problem.
That's genius. It's like their kitchens are running like clockwork,
It's all about keeping things smooth, minimizing disruptions.
which means happier customers, better profits. It all connects.
Exactly. And it's not just tech, they're also focused on making the work environment good for their employees.
Because in the end, it's the people who make it all happen.
Right. They're simplifying tasks, offering training, just making sure their employees' concerns are heard.
Sounds like a very people-focused approach to efficiency.
It is. And that's a big part of why they're successful. They get it. A happy team means happy customers.
Okay, so we covered the sales growth, the efficiency stuff. Now let's talk expansion. Where are they headed in 2025?
Well, very soon they're opening a brand new restaurant in Queens Creek, Arizona.
So continuing that westward expansion, huh? Makes sense. Lots of growth potential there.
And they're not just focusing on new spots, they're also going to remodel up to 30 existing restaurants.
Got to keep things fresh,
Yeah.
especially in the restaurant business.
Absolutely. And they're being really careful about where they choose to, open or remodel, focusing on places where they've already got good brand recognition and where they can find great employees.
So it's not random. They're picking spots set up for success.
Right. And they're paying attention to their off-premise business, too. That's like 17% of their sales right now.
Wow, that's a pretty big chunk.
It is. And they're making sure that whole experience is, as smooth as possible for their customers.
So whether you're eating in or ordering out, they're aiming for the same level of quality and convenience.
Exactly. They're adapting, right? Because so many people want those flexible dining options these days.
Okay, now for the part that always makes me a little nervous, the deep dive into the financials. Can you break it down so even I can understand it?
Of course. Let's start with the basics. They reported a net loss of $5.3 million for the fourth quarter.
Uh-oh, that sounds kind of bad.
Don't worry just yet. That number includes some one-time charges. Stuff like, asset impairments, some warrant extensions, and costs from that leadership transition they had.
Okay, so it's not as scary as it sounds at first. Those are kind of like unusual expenses, not the regular day-to-day stuff.
Exactly. When you adjust for those charges, their earnings look much better.
So how much are they actually making then?
Well, their adjusted earnings per share, which is the important number to look at, that grew 5.1% year over year.
Okay, now that's more like it. Solid growth, especially these days.
And it's not just earnings. Their restaurant level operating profit jumped 14% in Q4.
Wait, isn't that their most profitable fourth quarter ever?
You got it. That focus on efficiency is clearly paying off.
They're making the most out of every pizza, every pizookie.
And they're doing it while still investing in their team, their menu, the brand.
So not cutting corners, just being smart about how they run things.
Exactly. Plus, they're in a good financial position overall. They reduced their net debt by $7.7 million compared to last quarter.
So they're not drowning in debt. That's a good sign.
And they just bumped up their share buyback program by $50 million.
What's that mean for investors? Like plain English.
It's basically them saying, hey, we think our stock is a good deal right now. And they're putting their money where their mouth is, buying back shares, which can boost the stock price.
Good to know. Okay, what about the future? What kind of growth are they predicting for 2025?
They're expecting comparable restaurant sales to grow by 2-3%.
So steady, sustainable. Not bad at all.
Yeah. And they've given some guidance on their profitability, taking into account different scenarios. What if sales grow this much? What if inflation does that? They're being realistic, but optimistic.
So they're not just throwing numbers out there. They've really thought it through.
Exactly. Solid analysis, deep understanding of the market.
Okay, so they're killing it on sales. Operations are great. Expansion's going well. But what about the risks? Every business has risks, right?
Oh, of course. And BJ's is no different. One big one is the whole economic situation.
Yeah, things are a bit shaky out there.
We're seeing those signs of a possible recession, right? People might start tightening their belts, which could hurt restaurant spending.
True. Dining out is one of the first things to go when money's tight.
Another challenge is, costs keep going up. Inflation's still around, putting pressure on margins everywhere.
Yeah, food costs, labor costs. That's got to be tough for any restaurant to deal with.
It is. But to be fair, BJ's has done a good job managing those kinds of challenges in the past. They're always tweaking their prices, their supply chain, their labor practices to make sure they can handle inflation.
So they're not just crossing their fingers and hoping for the best. They're actually doing something about it.
Exactly. They're proactive, adaptable, That's crucial in this market.
Okay, we covered a lot. Let's sum it all up. Key takeaways from BJ's earnings call.
All right, here's the bottom line. BJ's beat expectations in Q4. Strong sales growth, margin expansion.
A bright spot in a kind of gloomy market.
Yeah. They're doing what they said they'd do, focusing on efficiency, building the brand, making sure customers have a good experience.
Hitting all the right notes.
And they're set up well for growth in 2025. Financially solid, clear vision, and they know how to adapt when things change.
Definitely a company to watch for sure.
Now, before we wrap up, let's have some fun. This is not financial advice time.
My favorite part. Let's get a little crazy.
All right, here's a thought-provoking one.
Oh.
What if we all took a page from BJ's playbook, right? Applied their efficiency principles to our own lives.
Ooh, I like this already.
Think about it. We could streamline our routines, automate stuff, optimize our personal workflows.
Like a personal productivity Pizookie?
Yeah,
Delicious and efficient?
exactly. Apply what BJ's is doing to our own lives. Less stress, get more done, more time for the things we enjoy.
It's like a life upgrade inspired by a restaurant chain. Who knew?
So obviously, we can't tell you to go buy a pizza oven and BJ stock. That's not financial advice. But we can recommend embracing that idea of operational efficiency in your own life.
Words to live by. Thanks for joining us for this deep dive into BJ's restaurants. Until next time, keep those insights coming. So they really do walk the walk, huh?
Mm-hmm.
It's not just talk about efficiency growth. They're actually making it happen.
Yep, and that's what makes them so interesting to look at, They're proving you can care about profits and ease your people and still do really well.
Yeah, it's kind of a refreshing take, honestly. It's
Yeah.
not always got to be about, cutting costs to the bone and being ruthless, right?
Right. BJ's shows you that investing in your team, your brand, taking care of customers, that can be good for business too.
Okay, but bottom line, good investment or not? What's the verdict on BJ's?
Well, that's where it gets a little trickier. There are always risks, right? Got to factor that in.
Like what? What kind of risks are we talking?
The economy, for one, like we said, things are uncertain. If we do hit a recession, people might cut back on spending, and restaurants would feel that.
Yeah, makes sense. Eating out is a luxury when times are tough.
And then there's the whole rising cost thing. Inflation is still hanging around, making it harder for everyone to, keep those profit margins healthy.
Food costs, labor. I can see how that would be a constant headache for restaurants.
It is. But to their credit, BJ's has a history of handling this stuff well. They're always looking at their prices, their supply chain, how they manage labor, trying to stay ahead of inflation.
So they're not passive, just waiting for things to get better. They're actually taking action.
Exactly. Proactive, strategic. You got to be those things in this kind of market.
So you're saying they're a pretty resilient company?
I'd say so. That strong Q4 plus their plan for growth, it makes me, cautiously optimistic.
Cautious optimism. I like that. Acknowledges the good and the bad.
Yep. Nothing's ever guaranteed in the stock market, right? But BJ seems to have a lot going for them.
All right, it's time. This is not financial advice. Let's get those wild ideas flowing.
Okay, ready for a fun one. What if you bought BJ stock, NDD, you also put some money into a company that makes, those AI-powered pizza robots?
Whoa, that's a combo. You're betting on BJ's doing well, A&D on robots taking over the pizza game?
Exactly. You're riding the wave of their efficiency, PLUS, that cutting-edge food tech.
Imagine. Every BJ's Kitchen, robot chefs cranking out perfect pizzas every time.
Bold move. But remember, folks, we are not giving financial advice here. Don't go all in on robot pizza chefs just yet.
Gotta say that disclaimer. But it's fun to imagine, right?
Totally. Gets you thinking outside the box what the future could hold.
Who knows, maybe robot pizza chefs will be as normal as the Pizookie someday.
Now that's a future I'd invest in.
Well, that about wraps it up for our deep dive into BJ's restaurants. Thanks for hanging out with us here on Talk Tickers.
Until next time, happy investing, everyone.